Hello and welcome back. It's Evan Clementino here from CBBB, and today I wanted to make things a little more casual. I wanted to just have a conversation with you around the bookkeeping process and what bookkeeping means for your business. So no spreadsheets or screen sharing today. I'm going to give you a quick rundown of the process and what that means for you. In business, you as the business owner and your employees make transactions, right? You sell jobs, you incur expenses, there's receipts and invoices attached to those transactions, money fills into your bank account, and the cycle continues, right? Now, bookkeeping is the task of organizing this transactional data and having everything prepared for the accountant to do your income taxes. It starts the moment that transactions are made. Sales generate invoices, expenses generate receipts, and the first step is to essentially put this transactional information into the bookkeeping program. Things get categorized according to the details on the receipt, such as the supplier, the customer, or the HST amount. And then when everything is categorized and taken care of, it is confirmed via the bank statement. This process is called bank reconciliation, and essentially what it does is allows the bookkeeper to confirm that they've properly accounted for every transaction that has gone in and out of the business. When reconciliation is complete, you now have access to updated and accurate financial data up to that reconciliation date. This data you can use to make decisions, understand your performance, etc., etc. And these reconciliations will happen frequently throughout the accounting year until the year end, when the tax filing deadline appears. And these books are then handed over to the accountant, prepared and ready for the income tax filing. The accountant will take these prepared reconciled books, and they will make a couple accounting adjustments that align with the generally accepted accounting principles, and then they will file your income taxes for you. And that will be the official close of your year's business financials. For you, this means getting completely up to date and approved financial statements that have considered all the tax or the accounting considerations made by your accountant, and allows you to get a really good understanding of your performance over the last year. Let's touch on that reporting and insight thing for a second. Notice that the bookkeeper and the accountant can both provide you with reports and insights. From the bookkeeping perspective, they're preparing things for the accountant every month, and at the end of every month, they can give you a report for the progress of your business up to that date. And then the accountant grabs these prepared books, they file your taxes, and then they give you the finalized statement. Recognizing that you don't have to wait until the end of the year to receive insights or data on your business is huge. Your bookkeeper has the ability to stay on top of your books and give you updates throughout the year, point blank. That's the process in a nutshell. Now let's look at some common issues that would prevent this perfect scenario from happening. The first one is a broken paper trail. So if your bookkeeper is not getting the receipts or the invoices, they don't have a true understanding of the nature of the transactions of your business, because all the information that they have is just on the bank statement. But what about outstanding invoices that you've given customers that haven't paid you yet? Or the reverse, what about outstanding invoices that you haven't paid to your suppliers yet? These things don't show up on the bank statement, and therefore the bookkeeper can't account for them until the transaction is made, which is a no-no in the bookkeeping and accounting world. So you need a proper paper trail in order to properly comply with the rules of accounting and to have these books prepared perfectly for the accountant. A symptom that this is happening in your business is simply if you don't give receipts to your bookkeeper. Another common issue is mainly just poor organization. So even if they do have a full grasp on the paper trail, staying updated with your books and staying on top and organized is essential to proper tax preparation. The real consequence of improper organization is that the accountant needs to spend more time cleaning up the books in order to file your taxes. And realistically, if you only talk to your accountant once or twice a year, they're not going to know the in and outs of your business, and they might miss something because of improperly prepared bookkeeping. A symptom that this is happening in your business is if you're giving your bookkeeper receipts and invoices all at one time. Like, are you just dropping them in their lap every 6 months or every year? If that's the case, then they're either doing all of your bookkeeping for the entire year at one time at the end of the year, or they're just keeping those receipts and sorting them for you, but not really using them in the process of bookkeeping. Either way, this isn't an ideal situation because realistically, they're gonna come back to you with questions about transactions that happened 11 months ago and that have completely left your priority list. Whereas someone who's organized will stay on top of these things, will do your bookkeeping every month, will ask questions when they're still fresh in your mind, and will be able to provide updated financials for you every month until the year end when the taxes are prepared and filed and you have that finalized statement. The third issue that I see is business incurring late fees, mainly due to late tax filing. And this isn't particularly the fault of the accountant or the bookkeeper or the business owner in isolation. Generally, it's the fault of the system, right? And it relates to the last 2 points that I've made. If there's a broken paper trail or poor organization in the bookkeeping system, this is gonna create a reactive nature in the bookkeeping system, right? As the tax filing deadline nears, the accountant and the bookkeeper are going to be scrambling to have everything prepared and ready for the deadline. They're going to put a lot more work on you to answer questions immediately rather than giving you time and heads up to do it. And realistically, they might just miss that deadline and you're the one that's going to pay for that. So if you are experiencing late fees or interest penalties on tax filings, that's a symptom that you're running into this unorganized or broken system. I've sprinkled the solution throughout this conversation, but essentially if you're experiencing any of these issues, the solution is an organized end-to-end bookkeeping system. You need a bookkeeper that's involved in your business, not just once a year, but throughout the year. They're helping you stay organized with receipts. They're keeping on top of the books on a monthly basis, and they definitely should be providing you with results and insights on how the business has been doing as they do the bookkeeping throughout the year. This essentially allows for a clean transition from the bookkeeper to the accountant as the tax filing comes around, and it leaves you without having to answer questions that aren't fresh in your mind. Last but not least, it keeps you compliant because an organized system from day one is going to allow for organized and accurate books and therefore accurate tax filings. So there you have it. That's the process from you making transactions and doing business to taxes being filed and statements being generated for you. Hopefully this video helped give some perspective on the system in general. If you found some value out of this video today, please smash the like button or hit subscribe. I drop videos every Monday, so stay tuned for the next one. And in the meantime, feel free to contact me or drop some notes in the comments on what you thought about this video. That's all for now. Thanks, guys.